I'm Kelly Powell. I hope everyone is having a great start to the new financial year. Thanks for joining us today for this episode of the BK Pod. This podcast will keep you up to date and informed from the latest news, legislative changes and important industry updates. There's always plenty for us to have a chat about, that's for sure. So today's episode, first up we will hear from ABN ABA Director Kelvin Deer. In this episode, Kelvin's joined by Hank De Jonge from Jonge Read. Jonge Read provides pre-insolvency advisory services nationwide, and today Kelvin and Hank will be discussing the current ATO aggressive tax debt collection policies. Following that, we will hear from ABA Director Peter Thorp for an update on the latest in representation space. Peter's joined this episode by fellow board member Kelvin Deer, and they will be discussing the new Tax Agent Services Code of Professional Conduct Determination 2024. So listen to that one. It's been getting plenty of press. It has far-reaching implications for the bookkeeping profession. Finally, we will hear from one of our ABN technical experts, Darren Hagarty. Darren will be taking us through a recent edition of the Bookkeepers Knowledge Base on shareholder loans and Div 7A. It's a great reminder of the role bookkeepers can play in dealing with these loans and supporting the accountant's year-end work. So let's get into it. We hope you enjoyed the episode.
Well, thanks for joining us today on the BK Pod. In this particular session, I'm going to be joined by Hank De Jonge. So I'm Kelvin Deer, Director of Australian Bookkeepers Network, and Hank De Jonge is a Director of Jonge Read. I'm going to get Hank to explain a little bit about what the firm does in a minute. But Hank, thanks for joining us today on Bookkeeper Podcast.
Thanks, Kelvin, and we really enjoy being part of the ABN team, and it's great to be here today.
So Hanks and his team are going to join us down in Adelaide in October for a discussion on some debt collection issues that the ATO aggressively undertaking at the moment. But today we thought we'd just have a little discussion about some of the things that are happening in this space. And in an opening statement to the Senate Economics Committee given by the new Commissioner of Taxation, Rob Heffernan, just recently in June 2024, he flagged the collectible tax debt owed has ballooned from around $26 billion, that's $26 billion with a B, in 2020 to now over $50 billion at June 2024. He also stated the ATO can't shy away from its duty to collect those outstanding taxes. So the Commissioner noted that the most collectible debts with the ATO at the moment are undisputed debt, and that means essentially being self-assessed. And they include not only income tax debt, but also unremitted GST, unpaid pay-as-you-go withholding, along with super guarantee charges related to businesses. Now, I went and did a little bit of my own research into this figure, as I found that some small businesses are overrepresented in the ATO's debt book. And they actually owe around about $33 billion of that $50 billion of collectible debt. So that's an enormous amount of debt that small business owe. And of that, $23 billion is basically as a result of unpaid activity statement debt. So, Hank, with debt levels peaking and cost pressures rising on business, in your view, what are the implications for businesses that have an ATO debt?
Well, Kelvin, the implications are vast, without a doubt. We're certainly seeing unprecedented numbers in relation to corporate wind-ups, and that's the ATO's way of bringing finality to these companies that won't pay. So we're seeing unprecedented numbers of wind-ups in relation, instigated by the ATO. Now, these numbers are up by some 50% on pre-COVID numbers. So I'm not talking about COVID, I'm talking about pre-COVID. So up 50%, and these are some of the highest numbers of wind-ups that we've seen in 25 years. Now, clearly, by not addressing the issues of outstanding tax and by clients sticking their head in the sand, it is a major problem. As the Commissioner's noted, and the ATO are acting, they don't want to be a bank, and this is why these wind-up notices are just so high. Now, this is going to continue, in my opinion, for a number of years to come. But on top of those wind-ups, the ATO have had a number of tools available to them that they haven't been using for a long time, but they've started using them. And firstly, what we're seeing is the tax office reporting overdue tax debt to credit reporting agencies. Now, this is now becoming commonplace, and I'm telling you, it's got devastating effects on businesses.
Yeah, I can imagine.
Oh, absolutely. Now, we had an example not so long ago where we had a successful company that had a large tax debt which was due to COVID. They entered into a payment plan with the ATO. Now, over Christmas, they defaulted. It was a technical default. They still don't believe they really did default, but they did. Anyway, bottom line of it is the ATO, without making contact, lodged a default on their corporate credit report. Now, the next day, 3 of their trade suppliers rang them up and said, listen, I'm very sorry, but we're going to stop supply. Now, our client was talking to them and said, why are you stopping supply? Our account's up to date. We haven't missed a beat with you. You know, we always pay on time. And they said the issue is that their credit insurer, so the supplier's credit insurer, says no longer covering them because of that default. Now, this basically shut down a business which could have, without a doubt, could have traded through.
You can see that being a massive problem. Okay? It's massive.
It's huge.
Yep.
And we've had a number of clients, not just one, a number of clients that have had that same issue. Now, another tool that the ATO are using extensively at the moment are directors' penalty notices. Now, I know that we've spoken about it on the ABN network before, and I know that you would have had other experts as well at different stages, but the DPNs are very, very powerful because they basically pierce through that corporate veil. So they'll make a company director personally liable for debts that otherwise wouldn't be. Now, basically, there's 2 types of directors' penalty notices that but the one that we're talking about is what they call a non-lockdown one, and that's when served. It gives a company director a period of time, 21 days, to enact the appointment of an insolvency practitioner, because if they don't, they become personally liable for that debt. Now, we had a client just recently received one of these directors' penalty notices, about $1 million. By the time they'd got to their accountant and been directed to us and so on, they had 5 days left to run before that 21 days was up. So basically the bottom line of it is we were able to instigate the appointment of an insolvency practitioner within that 5 days.
And as you say, $1 million, becoming personally liable for $1 million is just out. Yeah.
Look, I can assure you, Kelvin, that client was extremely thankful.
Yeah, I bet.
So they're 2 different tools, but the tax office also can issue garnishes on trade debtors, on bank accounts, and we're seeing them use them at the moment. So, it's worth noting that failure to deal with outstanding debt will also result in just the fact that the GIC, the interest, will just continue to grow, and future tax refunds will be withheld and be offset against that debt.
Yeah, thanks for that, Hank. Look, none of that sounds very pleasant for a business to deal with. So in your mind, what is the key message for any business that does have an ATO debt in front of them?
Well, the ATO have said it to us. So they're not a bank for business, and they mean it this time. And so they're basically saying, get your financial house in order or risk insolvency action being taken. So the key message is don't stick your head in the sand, or your clients, I should say. Don't let them stick their heads in the sand. Take some preventative action now and deal with it.
Yep, no, that's great advice. We often see, people sort of saying, I'll eventually get round to that, and it finds its way down in the inbox or the mail list, and eventually it just becomes a problem. So, yeah, I agree with Hank. Don't stick your head in the sand, or don't let your client stick their head in the sand. If they've got something from the ATO, then be proactive in dealing with it. Now, Hank, a business may not know where to start if they are in a position of cash flow challenge and unable to pay their bill. Now, your business may be able to assist small business achieve a better outcome than simply closing the doors and walking away. Can you explain to listeners the approach you take that may help businesses navigate some of these financial challenges?
Sure. There's lots of options available, Kelvin, to a business that's in financial distress. So whether it be negotiation with creditors, a refinance, or a small business restructure, a liquidation, or even bankruptcy. Now, I mentioned there the small business restructure, and that's a new product that was brought out during COVID to help small businesses, and it's a cents in the dollar offer, and we've had a very, very high success rate, as it's allowing us to help company directors settle debts with unsecured creditors for around 20 cents in the dollar.
Wow.
Seems to be the number.
Yeah.
And Kelvin, the ATO are voting in favour of them,
Really?
which is outstanding.
Yeah, yeah.
So what's important to understand is that all clients are slightly different, and that and we're really good at sitting down with those clients and helping them select the right option for that client's particular circumstance.
Yeah, fantastic. Now, Hank, if any of our listeners would like to get in touch with you and your team regarding any of their clients, what are the steps that they can take, and how do they go about that?
It's a really simple process, Kelvin. Our firm is all about offering great advice, but also providing someone to talk to through that whole process, because let's face it, it's a very, very emotional time. One of our company catch cries is that we hold a client's hand through the process, and we stand by this. We rate 4.9 stars on product review, and that's a testament to that hand holding. It's important to remember that we don't charge for our advice, and therefore our first meetings and our written advice are obligation and cost-free. But when a client contacts us, firstly, we arrange a time to catch up, either in person or via Zoom. As this initial meeting, we get an understanding of the situation and what the client's trying to achieve. It's very, very rewarding, I can tell you, at the end of that meeting to see the relief on a client that they understand that there's some options available. So from there, we obtain the financial information required by us to provide a detailed analysis, and we then come up with the right strategy for that particular client. We always have one thing in mind, though, and that's the best result for the client and the client's family. That's all we care about, Kelvin. So our team then document that strategy, and we arrange for a second meeting, normally 5 to 7 days thereafter, and we present that to the client. It's a very, very detailed document which basically gives the client a roadmap of what we propose to do and how it will work, what the risks are, and what it will cost. So from there, the client can make an informed decision on what they do. So to reach out to us, I guess our details are always available through the ABN website.
Yeah, terrific, Hank. And as you say, look, there's no doubt that it's an extremely stressful time for clients who are in financial difficulty. So any sort of steps and processes that they can take to assist them through that journey would no doubt be well received. And if you would like to look more at the debt issue, then head to the ABN website, go to our partners area, and you'll see Jonge Read in there if you'd like to talk to the guys. All right, well, that wraps us up for this segment of the BK Pod. Thank you very much, Hank from De Jonge Read, for joining me today to discuss what is a growing concern amongst small business and sharing some valuable thoughts. And I look forward to joining you all again next month for the next edition of the BK Pod. It's bye for now.
Well, hello, my name is Peter Thorp. I'm a Director of Australian Bookkeepers Association. I have with me today Kelvin Deer, our Director on the Standards and Governance Forum at the TPB, and he shares with me the consultation work we do with the Tax Practitioners Board. This month we're going to have a chat about a new initiative from government in response to the PwC debacle, which truly is the gift that keeps on giving.
In all the wrong ways.
In all the wrong ways. So what we're looking at is a review of the eligibility requirements for registered practitioners. They are BAS and tax agents, as well as the registered associations themselves. We have already seen a number of PwC-inspired initiatives from the government in recent times, including the disqualified entity rules, the Dobbin provisions, and last month, the Minister's Code of Conduct determination. But this is something altogether new. So let's just jump into it, KD, and tell our listeners about this review.
Yeah, thanks, Pete.
Well, listeners, unlike the Minister's last initiative, which was the Code of Conduct Determination, as Pete just highlighted, this one incorporates some consultative elements. Good work.
Yes.
Lovely. So we've got a discussion paper that has been delivered. It's open for feedback, and it's not just associations that can provide feedback. If you have something you want to say, then you're entitled to do it as well. The paper summarises the current position with 5 registration elements, and it includes government issues for consideration and then poses some direct questions where they're seeking some feedback. The consultation period or process has already started with the association, so that's great to see. And this particular initiative focuses on the TPB registration requirements.
Yeah, we've seen that. So the paper has 5 distinct initiatives for consideration. The first one is the company and partnership registration rules, which are proposed to be altered in a little manner. We'll talk about those in a moment. The re-evaluation of the registered associations accreditations, broadening of the relevant experience requirement, potential for amending the primary qualifications for registration, and initiatives that improve the fit and proper person registration requirement. So look, mate, what jumped out of the discussion paper that directly affects our bookkeeping community?
There's a few things, mate. So as you highlighted, companies and partnerships. So if you're trading through one of those entities or structures, then they're looking at some stronger governance and a potential increase in the number of qualified persons. So that's the people who are qualified or registered individuals who need to be part of those entities to ensure that there's sufficient people involved with them.
I guess that probably affects the larger businesses too, the ones that got a number of employees.
Yeah, certainly. Probably focus more on the larger than as opposed to a sole trader that's still trading through a corporate entity. We see the broadening of the relevant experience, so there's more flexibility here, and it looks at absences like maternity leave, etc. So we think this one's a good thing for the bookkeeping community, so I think that's good.
Yeah, I think that's a tick.
Yep. And then we see, as you said, improvements to the fit and proper person test, and this can focus on conflict of interest, which really was what came out of the PwC issue. Then we see consideration of spent suspensions and other non-TPB suspensions. So a few things there, but they're also looking at possibly increasing the 5-year limit on the deregistered person. So there's a few things that they're up for discussion there.
Yeah, we did skip over one there, which was the primary qualification. The paper itself doesn't seem to propose any major lift for qualification, so we've jumped over that one. This initiative looks like it's taking a more consultative approach than the Minister's Code of Conduct changes that we saw last month. So this time they've started with the discussion paper, sought some feedback and engagement with the various stakeholders. So hopefully what we're going to see out of this is a better outcome from the initiative than perhaps the Minister's determination on the code. So any final words, KD?
Pete, look, on face value, their government discussion paper does not seem to have any sort of disturbing elements, which is great. I think listeners will hear more from us at Australian Bookkeepers Association as this particular consultation piece unfolds, but there's a little bit to still work through, and we'll be sure that we represent our members accordingly.
Oh, that's excellent. Look, that's enough from us at BK Pod. We'll see you next time, KD.
Thanks, Pete.
Hello and welcome to the BK Pod. My name is Darren Hagarty and I'm a director of ABN. I'm also a tax agent and chartered accountant in my own right. One of the fun responsibilities that I have at ABN is authoring our technical publications, and today I want to shine a light on edition 107 of our Bookkeepers Knowledge Base, which is entitled Shareholder Loans and Division 7A. Now, this edition is particularly timely at this time of year because the end of financial year has just occurred. First things first, of course, there are some very pressing matters to attend to for your clients throughout July, not least of which are the likes of STP finalisation, payment of super, and of course, preparation of the June BAS. But once these are in the rear view mirror, one of the next things you could find yourself turning your mind to is reviewing the end-of-year financial statements and ensuring that they're presented in the best possible light to pass on to your client's accountant. In this regard, the BKB on shareholder loans and Division 7A is well worth a read. Private companies are, of course, a trading structure commonly used by many clients, and within these entities, shareholder loans are very much part and parcel. So this edition of BKB discusses the significant tax issues that relate to shareholder loans and the vital role that can be played by bookkeepers in dealing with these loans and supporting the accountant's year-end work. In the edition, we start by overviewing the Division 7A legislation itself and the concept of a shareholder or associate. We then consider the implications of Division 7A applying, and we provide some practical examples. And we also look at the various exclusions. Now, where a company has made loans that are caught by Division 7A, we then look at the concept of a complying loan agreement and its various components, such as the benchmark interest rate, the minimum yearly repayment requirement, the term of the loan, etc. Critically, the BKB then provides the all-important guidance for bookkeepers. So we discuss things such as the importance of separate loan accounts for each person or entity, the naming of the loan accounts, the relevance of maintaining separate loan accounts for each financial year, the allocation of loan repayments when multiple loan accounts are at play, the recording of cash repayments, the recording of interest, GST and BAS implications, deemed dividends, and the handling of unpaid present entitlements and loans involving related trusts. There's also a fantastic table which serves as a ready reckoner of the typical debit and credit activity that can pass through a loan account with a company. And the edition then culminates with a comprehensive practical case study. So by having a general awareness of the impact of Division 7A and by following the principles discussed in this edition, you can really streamline and expedite the accountant's work at year end. Enjoy the read.
Well, that's a wrap for us today. I'd like to thank all our guests for joining us. We know it's a busy time of year for everyone, so thank you for joining us as well. Just a couple of other small updates. If you didn't see the email releasing the detailed agenda for the bookkeeper event being held in Adelaide from 10th to 12th of October, it is now live, so check it out. Conference website is bkevent.com.au. We've worked really hard to find the best speakers and the most relevant content. It's looking great. We're really excited about it. Just to give you a little bit of insight into a couple of the great sessions we have, if you liked Hank's episode on this podcast, Hank's actually presenting at the conference and he's talking about bookkeeping in a high insolvency environment. A few other sessions just to mention, we have sessions on connected apps to optimise your business, keeping up to date with the rapidly changing payroll landscape, ATO and payday super update, and the AI-driven bookkeeper and the future-proofing your practice. So just to name a few, tickets are running really low. We have less than 50 left. We have over 300 coming. So if you're thinking about it, I suggest you get in and grab your ticket now. So thanks so much for joining us today. Take care, and until next time, cheerio from the ABN team.